We have with us right here in the studio Kaustubh Belapurkar, the Director of Fund Research with Morningstar Investment Advisers. Kaustubh, good morning. Like Tanveer, in fact, was asking you, what's happening in the markets right now? Where is it that you are seeing attention really coming in? What pockets? And do you believe that perhaps the quantum or the excitement with which funds were pumping in money in the equities may have tapered down a bit?
Sure. So let me actually start with the last bit of the question first. So I think April has been an interesting month in the sense that there has been a little bit of slowdown in terms of the money that's gone into equities. It's not dramatic, but that's also because of some operational changes that are happening from the asset manager where they're restructuring a part of their portfolios. So I don't think that's something that it's going to be a long term. It's probably just over the next couple of months and it should come back to normal, but it's not a very dramatic drop. In terms of sectors, that's where I think there's a little bit of musical chairs happening between and within sectors. So to highlight some of the things that financial, which has been a very popular sector for such a long time, we're seeing start to see some selling around that. Where we're seeing likes of ICICI Bank, IndusInd Bank, seeing selling over the last few months, and this month was no different. Technology. We're seeing a shift between TCS was largely bought last month in the month of March, and now it's shifted to Infy where they've actually sold TCS and they bought Infosys. So that's a little bit of a swap that's happened, obviously on the back of the returns that the stocks also managers have taken some money off, and additionally certain micro sectors. So your consumer cyclicals are a sector that have seen a fair bit of activity. So auto has seen activity. Hotels, we've seen a fair bit of buying, including the recently launched IPO of Lemon Tree, and and energy is another counter, which is interesting. We've seen where crude oil prices are growing, but managers seem to be fairly positive, and they've actually stacked on to quite a few of the oil marketing companies.
Rationalize the interest in hotels. Because I know, I also very clearly remember after Lemon Tree's listing, suddenly there was a spurt of activity.
So I think, as an economy, obviously, our consumers are spending, and, so I don't think the room rentals are really dropping off. There is a great amount of demand, and when an IPO comes around, typically you expect visibility for the other counters also to come. When, there's, when you look at valuations of a certain new listing, the other counters also get that visibility, and that's really what's happened. So it's not just Lemon Tree, you've seen Indian Hotels, EIH also get a fair bit of money in the last month.
Yeah, that we have. The other interesting pocket that I am seeing is Infosys. Like you as well mentioned, that has seen a lot of interest, a lot of these IT companies, and most of them have all as well been able to deliver very good numbers in Q4, so perhaps that as well has piqued investor interest. But when you look at mid-tier IT companies, is that as well being able to garner attention? Because one thing's for certain, and this is something that analysts as well point out, that those are the guys that will lead growth going forward as opposed to the big ones.
Okay. So what's really happened is managers have been very, very underweight IT for a very long time. So right now, from what we see, it's been largely stacking up on the large cap names, and that's also very select names. So between Infy and TCS was really the ones that we've been buying. On the mid-tier, not so much. That's what the trend is right now, but I guess once they do load up a little more on the large cap names, they might start looking at the next one. But largely from a manager's perspective, it's the bigger names right now.
Where do you think contrarian bets are being taken, if at all?
So I would say that energy probably, especially where oil's gone right now, I would play that as a contrarian bet, because
actually, BPCL, right?
Yeah, we've seen BPCL. That's one of the larger buys, but even the likes of HPCL and Indian Oil have seen reasonable purchases. I think that's one thing. Managers, at least what we think is they're betting on that the price rises would eventually be passed on. We don't know in what quantum, but I think that's the call that they're taking. That you will see that the oil marketing company shouldn't be hit by too much of a subsidy on.
I'm surprised by the fact that TCS outperformed Infy, in their earnings call, but the purchase value for Infy has been higher.
Yes.
I mean, it's the top purchase stock for the month of April.
So what's happened here? So last month when we spoke, TCS was the darling, and that's when the price was still kind of coming up to speed, and they bought almost 4,000 crores of TCS at that month, and you've seen a stack.
But that in March. Yeah, in March. So exactly. Yes. So that was before the earnings, before their Q4 report, right? Now that the Q4 report has come out for both the companies, and the stock has reacted, hit the $100 billion mark. It's interesting to see how there's more focus on.
So I think one of the theories around that is valuations. Obviously, TCS is running ahead of valuations in terms of Infy. So it's not like they've completely discarded TCS, but they have the stock did do really well in April, and that's why they've taken, just moved some money to Infy. I think that's a play more on the valuation rather than anything else there.
HDFC Bank, again, I think the darling stock of most of these funds. It continues to be one of the largest in terms of value, of value being held. But don't you think that, have you seen any sort of, like you said, you have seen a bit of tempering when it comes to the holding that has, that's usually been in financials, or at least there's been a tempering in terms of the flows that has come into financials. What would you attribute that to? I mean, of course, and these are private banks we're talking about, not, of course, the PSBs.
Right. So I think what's happened is there was an amazing amount of euphoria on the financial sector, where there's so much focus over the last 15, 18 months that they're already fairly overloaded on their financial counters. So now's the time that they want to take a pause and look at some other sectors which could potentially now, be the next sort of winners for them, and that's why the focus has moved away. So they're not really selling too much, while there has been selling on some counters like ICICI and some of the PSUs, but HDFC continues to be held, and it is the most popularly held stock, but they're not buying in large quantities right now.
Okay, final word in, does the purchase trends or the sell-off trends indicate, the overall sense in the markets? On balance, does it seem like appetite is still strong for taking fresh positions?
Yeah, absolutely, because what's happening is flows from retail investors haven't slowed down. So in March we saw a temporary slowdown, which is very, very seasonal in terms of end of the year, but April flows in equity funds are back
start
to
of the new financial year.
Yes, 11,000 crores, which is a fairly healthy number. So I don't see that slowing down. So as long as those flows continue, managers will continue to look at opportunities and keep pumping in money into the markets.
Yeah, I think that's the trend had shifted right from FIIs to DIs, and of course the equity culture as well in the country is more or less gaining momentum. Thanks a lot, Kaustubh, for that. It was a good interaction on what exactly are funds buying.